Hello, everyone, and welcome. Today I'm going to be covering Morgan Stanley, the stock Morgan Stanley. First off, I cover these stocks like an investor would, not necessarily a trader. There's nothing wrong with trading, and I hope you can get information about the company on it. But a lot of the things I'm going to be looking at is more so for a person looking to hold 3 to 5 years instead of, 3 to 5 days or 3 to 5 even months, right? So that's how I look at things. First off, what I like to do whenever I look at a stock for the first time, obviously I've looked at this for more than the first time, but I'm going to assume some of you never have really looked at this that closely. I like to look at the 1 year. Okay, that's pretty decent, right? 26% in a year. Actually, that's really great. The 5 year, that also looks good. And the all banks will be, banks are a little bit tricky here. It's not like a tech stock, but, nothing super, insane that sticks out to me with it. I don't do a whole lot of banks, but, I do own Morgan Stanley, and we're going to dive a bit into that. So, next, I'm going to look at financial stuff. Generally when you see a company, is up, and then you look at PEs to match it. You can see, okay, is this company growing? By how much and whatnot. So its PE is 17, which doesn't sound like that much. I think that's right around the normal S&P 500 average PE. But for a bank, that's actually fairly high. I don't know regional banks. I'm just talking about the big banks. I do not know every regional bank's price or PE, at all times. But for PE also indicates that this is a growing company. I like to look at both, because you never really get the full picture just looking at one. Maybe, for example, a good example, AMD's PE was like 260, but most of that is just because they had a merger and were writing off debt, or maybe the company is high because they had a tax write-off or something like that. So even this doesn't say the full picture, but it gives us a good blueprint. And so, for example, if you saw a lot of growth, and this was, in the 80s, maybe it's not necessarily a lot of growth, although likely that's happening. It's also a lot of expected growth in the future is baked in. And with Morgan Stanley, although it's slightly high for banks, it's not insane. So that checks out. Morgan Stanley, one thing we really have to look at here, though, the annual dividend yield. It's not insane, but this is a good dividend. It really is. With growth and 3.5% dividend, there's probably a lot of people that view this as an attractive stock, and I would also be one of those people, but we'll dive into what I think about more later. But this could go in some dividend portfolios. I don't personally have just a strict dividend portfolio, just because of where I'm at in my investing journey and my age and all that, but so and then, if I didn't know anything about the company, I'd read about it and say, okay, Morgan Stanley Financial Holding Company provides various financial products and services to corporations, governments, and individuals, yada, yada, yada. So national securities, wealth management, investment. Yeah. So I think my understanding, at least of what I know, Morgan Stanley, they're not like a personal banker that much. They mostly do investment stuff, right? Although they have, they hold vast amounts of wealth, both in security. Well, they don't, you know what I mean. But I'm sure there's lots of money that even just sits in their accounts, But yeah, you can read all this if you want. We're not going to dive into that today. Maybe we'll dive deeper into what they all do in a future video, maybe like an hour-long video. But I don't need that today. This is more like a baseline outline for what they do. This indicates growing. We've already kind of looked at that. So, banks also, yeah. This kind of goes into negative. I guess I usually do good first, but negative. Some people do not like banks, for reasons. Some Yahoo sometimes freezes if you go from that to that, but bank thing happened around this time period right here. I'm sure most of you know of that. If you don't, you're very new, and that's okay. I don't know who doesn't know about that. Maybe I don't know, but I don't want to make someone sound dumb if they don't. But maybe you are. I'm just kidding. Yeah, no, there is an aversion to banks and similar Do they even call it a bank? They call it capital markets, right? So is it really a bank? When I search top banks, they show up. So that's technically their segment. If I were to look up, let's do CD. Yeah, it categorizes them as a bank. So maybe me saying bank is not really what people like. Maybe some people get nitpicky about that. I personally do not care. I'm going to clump them all together. So look at that. That is a good. But anyways, also 5 years. Let's look at that. If you got 144% returns while getting a 3.5% dividend yield, I don't know if it was around this the entire time. Let's assume even around 2. That's some amazing returns. The S&P 500, I do not think returned near that. So, although, like I said, it depends on where you bought. If you bought here, you are basically even after 3 years. So if you bought during COVID highs, not versus if you bought COVID lows, that's gonna really maybe factor into how you view this company. I have not been holding this for very long. I do own this company, so I may be biased in that sense. I bought around 85-ish, I think. So I've actually done very well in the short term, at least. Although buying this is more for a long term, and I guess a positive, right? I like tech stocks. That's kind of my thing. I get them more. I was a CS major. I graduated. I didn't drop out, but even if I did, computers are my thing, right? Tech is generally my thing. I understand it better than something like a financial institution. However, it's not always good to be in one thing, right? Even if tech generally does better, there's important reasons to be diversified. In the long term, maybe it doesn't matter to you at all. QQQ and hold. If that's your thing, incredible. Do that. There's absolutely nothing wrong with that. I personally like to have some variety, just so if, for example, REITs, I got into REITs, I bought some a few months ago as well. It's very vague, but REITs held their value roughly when a lot of stuff was tanking in a panic a couple months ago. I don't even know. I would like to illustrate that, but maybe it was even only a month or two ago when people were panicking about the market. No, the economy. Maybe it wouldn't be a soft landing, right? But I lost my train of thought. It wouldn't be a soft landing. But anyways, diversification, actually, this is what I was saying. It really helped me with that because REITs actually performed and so when they were saying rates were dropping as well. So even though tech was panicking, these guys were, maybe that day it didn't, but generally during that same time period, it's like, oh, REITs are up 20%. So I just sold some REITs and I put it into tech. It was like, even if these fall significantly more than where I put it in long term, this is going to go up. That's my mentality, be greedy when others are fearful, whatever. That's not the exact quote, but something to that degree. And that, I like that. I like to have some things that, maybe it's not Johnson & Johnson, it's Procter & Gamble, right? Procter & Gamble, everything falls down when everyone's selling off, but some fall more than others. So could be a good diversification for you. Maybe you love banks, maybe you don't, but yeah, that's some of the risks and stuff. Financial institutions are always iffy. Like, that's just, some people are uncomfortable with that. Some people aren't. This seems like a good one. I like diversification personally. I'm not saying you have to do anything, right? But I think personally, long term, I think this stock is going to do well. It's a good dividend nonetheless. If rates drop, and you don't like CDs, this will give you roughly, if obviously CDs are doing much better than this, and obviously there's much more risk, but your capital can be taken out a little bit easier. But of course, I'm not saying Morgan Stanley should be used as a side for CDs, but maybe you usually have money tied up in CDs because rates are like that, and then you put more into stocks. That's a thing that could be. I'm just spitballing here, but I like it personally. Let's see what other people think. Okay, it's about at the price target, right? So this is not like a swing trade, like, oh, it's here and it's going to go here, right? People, there's a wide variety. Most say buy, good amounts say hold, some dudes saying sell. I don't give too much credence to analysts, but it's something to factor in, right? When you're trying to look at if you're buying a stock, you have to build a picture, chart, earnings, current price, historical price. What does it do? Analysts, what do they think? You have to factor it all in, and you have to draw a conclusion. Do I want to put my money in here? So it's painting a picture more than it is. This is what we're going to do, right? Because analysts are wrong. They're wrong often, but they're also right often as well. Schwab loves it, which is interesting. They had it at an F not too long ago, or a D not too long ago, when it actually performed better. So this is a year performance. So if you like trading, in a year or whatever, traders are usually shorter than that, but maybe you're a year trader. I don't know. Schwab personally thinks it's going to do good over the next year. Morningstar, narrow, buy. They don't like it. I don't give too much credence, but it's good to say, what are other people thinking? Compared to some other, I'm not going to dive too deep into that. Also, I don't dive too deep into earnings, at least in this video. There's just not enough time. You don't really care about it. So I don't have like the in-depth knowledge that I do about some of these tech companies like TSM or AMD or whatever, but this is a decent, you should do more research. If some of this piques your interest, I would look more into it, dive deeper into the financial statements and all that. I don't know all that off the top of my head, but if you want diversification into the banking how does Schwab say it? Capital markets sphere. This is one of the better plays, in my opinion. Maybe you do not like that. Maybe you don't, but I personally do. I guess they're probably going to fall with the market too if, they do a bunch of money management stuff. But honestly, a lot of people that, I don't know. I don't want to dive too into the details and make assumptions about their business model when I don't know off the top of my head all the details of it. So, but I would making a very broad assumption here, an uneducated guess. They may fall. I mean, we can kind of let's take a look at the all-time chart here. Yeah. It's going to glitch. It freezes up when it does this. Oh, by the way, I'm not editing my videos because this is my second video ever. So if you like it, leave a like. But anyways, I would assume they maybe fall a little bit more than a normal bank might. Completely crash when the market falls, just because they do money market managing and all that. But anyways, if you like this video, made it to the end. Most of you didn't. If you did, leave a like, subscribe, watch another video. I appreciate it a lot. I'm a new YouTuber, and it will help me a lot, and I'll get better, I promise that. So if you did like it, it would mean a lot if you did any of those things. So I appreciate you watching, and hope you have a good rest of your day.